Hello, traders. I've got a stock that looks great right now, and I'll explain how I found it and why I like it. Subscribe to my channel now and turn on your notifications so that you don't miss any of these daily trades. You'll help me build my channel, and I'll help you build your account. Let's get started. We are almost 2 hours into trading. It is Monday, March 8th. Hello, traders. I'm not going to be reviewing any of our previous trades because they were all on the long side. As I mentioned last week and the last couple of videos that I've done, you really should be on the sidelines if you're a swing trader right now. The market volatility is just way too high. We don't know which way the market's going to go. Looks like the stimulus bill is going to get passed. It's back in the House right now, $1.9 trillion. Not a lot of excitement in the market. We had some buying into the weekend on the notion that that bill was going to get passed. You can see the big bounce that we had off of the 50-day moving average. Let's put that major moving average up. We'll also put up the 100 and the 200-day. You can see where they come into play. And there's the 50-day moving average. We are above it. We are also above this upward sloping channel. Here's the deal. You can see long red candles, and we're getting them sequentially. We haven't seen that in a while. If you look back, it's a one-off type deal with these red candles. Now we're starting to see them group. That means that the selling pressure is becoming more organized. You can also see that the support level, 1, 2, 3, 4, 5 tests, and even a couple of breakdowns. So 7 times we've tested that 50-day moving average in the last couple of weeks. Downward sloping trend line here. I feel that we've got a good chance to test the 100-day moving average. Here's my philosophy on swing trades. I think that the upside is relatively capped on the market right now. We didn't get that big buying climax on the stimulus bill. We've got valuations still pretty high. That tells me that one of two scenarios is going to play out over the course of the next few months. One scenario, the market simply compresses in a sideways fashion while profits grow into current valuations. The other scenario is that with interest rates starting to move higher, we get a normal 10% correction. That could take us down to the 100-day moving average. It could take us a little bit lower. Given that there's an equal probability of each one of these events happening, as a swing trader, I'm not worried about a huge monster rally right now. But if we do get that 10% correction, I'll have a chance to enter my long positions at a much better price. And the second thing is that as the market starts to come in, just like it has been here, I get to evaluate the stocks that I was thinking about buying, and I can see which ones are the real McCoy. The ones that aren't the real deal will sell off very readily. And those are the ones that I want to avoid. When the market does find support on a swing basis, I am going to be looking for stocks with heavy volume, relative strength, and nice technical breakouts. I'm going to show you a few of them in a few minutes. And this is the type of process that I'll be going through. But let's go and take a look at the market right now. Downward sloping trend line. Today we've got a nice little rebound happening, some follow through buying. I am currently short the futures right here at the near the high. I've got a stop in place, and I'm also short a little Apple right now. Those are my only two positions that I have on while I'm recording. I don't like to have a lot of trades on because I can't adjust them. The mix of green and red candles tells me this rally is not very strong. We're simply floating higher, and the market could still go either way. The fact that we're above the 50-day moving average, that's a good thing. The fact that we've been able to hold the gains so far, that's a good thing. But I feel that at any time, we could see a couple of long red candles. They'll wipe out the gains very easily, and that'll pave the way for the downside being tested. We've seen some decent selling pressure, so I don't know that we are necessarily going to finish higher today. Looks like it early on. We'll see what happens. So let's go and take a look at a couple of trades. Here is why I like my Apple short. It's moved against me very slightly because I shorted it a little bit earlier in the day. You can see how Apple has been spending a lot of time below the 100-day moving average. You can also see how this downward sloping trend line is still intact. And there's also a horizontal trend line that I drew above the 100-day moving average so that I know when I log in, I'll see if Apple has been able to get through that trend line. If I put up my 10SI indicator, it's going to show me that the stock is weak relative to the market, orange line below zero. Right now, if you are shorting and you are favoring the short side, you would want to be in tech stocks. QQQ has been very weak, and you can see how it's right at the 100-day moving average. The S&P 500, on the other hand, is above the 50-day moving average. So the S&P 500 has been holding up much better than the QQQ has been on a relative basis. So again, if you're going to be shorting, you probably want to favor some tech stocks. So let's go take a look at some of the stocks that I like on the long side. I'm going to focus on my heavy buying list right now. I've got a few that I want to show you. These are the types of patterns that I'm going to be looking for. TMUS is one stock that looks pretty interesting to me. Downward sloping trend line right here. You can see how it coincides with the 50-day moving average. TMUS has been able to get above that 50-day moving average and the 100-day moving average. We have a double bottom, higher low, and support off of that 200-day moving average. I like this stock. This is a decent looking stock. Cell carriers tend to be a flight to safety because they have very stable business models for the most part. So yes, I think TMUS looks great. Now, if the market starts to rally, could we see a rotation out of a flight to safety stock? Yes, so you've got to be a little careful in that regard. But again, here you can see relative strength. We can search for relative strength in Option Stalker. That's one of the variables we can use, and we can pick our time frame. Do we want it to be strong on a relative basis on a daily chart, a 5-minute chart if we're day trading? You can select which time frame matches your trade duration. If I continue to go down, I'm going to take a look at a couple of others, and I'm going to go to Cisco. Cisco also looks really good. There you've got your downward sloping trend line. Stock has been able to get above the 50-day moving average. There's a horizontal breakout right here. Long green candle closing pretty close to its high. Massive follow through today with the stock on its high. Now, one thing that you need to do is to put the stock move into context. What does that mean? Well, what does the stock normally do? You take a look at it and you go, wait a minute, this stock doesn't normally make big moves. It makes these tiny little moves like this. And when you get these long green candles like that, they tend to reverse. So do I need to rush in and buy Cisco right here, right now, today? No, I don't have the market set up for it. Still got the downward trend line intact. Market conditions are extremely choppy. This stock is really making a nice move higher right now, but it has a tendency to chop around and give back some of those gains. So you have many reasons not to do the trade. It simply goes on your wish list. And then when we have some clarity in the next few weeks and we see the market come down, test some major support levels, a couple of long green candles closing on their high, retest, higher low, double bottom, all those types of things, yes, then Cisco is going to be the type of stock that we want to take a position in. I'll show you a couple of other stocks. We'll take a look at BNGO. I saw that one this morning. That was a trade that one of our members got into in the chat room. That was a nice little move higher, but nothing here on a swing basis that I would want to touch. I'm just going to click through a few charts here. The airlines are going to get some bailout money. You can see you've got your flag right there. You've got your downward sloping trend line. So yes, I think airlines are going to do pretty well. SAVE, Spirit Airlines, nice bullish flag setting up. Bullish hammer right there. Yeah, I think the airlines look good right now. So if you are a day trader or an extremely short-term swing trader, you can try some of these stocks. Just make sure that you're keeping a very close eye on what the S&P 500 is doing right now. You can see that we're backing off the high. We had a test here, we had a test here. We weren't able to break out. Well, if the market keeps bashing its head up against a ceiling like this, tails above body, then you're going to eventually try the downside. That's probably what we're going to see. We have a bearish 1OP cross right here. We'll see what happens. I really don't have a good read on the market. I'm keeping my trading size very, very small. So let's take a look at the bearish side. I've already shown you a trade in Apple that I think sets up pretty well. And we'll see if there's anything else that looks attractive on a daily chart. That's a nice horizontal breakout right there. Horizontal breakdown on BILI. Yeah, I think there's definitely a day trade in there for us. You can see, nice relative weakness. See how easy that is to find? Okay, I'm trading. Gee, the market keeps bumping its head up against resistance. Time and time again, we aren't able to move any higher. I have a bearish 1OP cross. Maybe I should look for some bearish stocks. Hey, here's one. It's below the prior day's low. It's got relative weakness. It's got some momentum on the daily chart. We've got a horizontal breakdown right here. That's how we do it. Good luck with your trades. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.